Back with Bobby and JJ Radio. We're speaking with Ed Guerrero, the owner of Guerrero CPA. Go see Ed at 210-490-7100. Our CPA, the best CPA in town, has over 3,400 clients, a lot of them business owners, a lot of people in real estate, and that's how we met him. He did talk about business owners in particular earlier in the show, and if you miss it, do not cry. You go to bobandjjradio.com. You become a fan of the page, and you can listen to it, see his pretty face on YouTube here. It'll be in a couple of weeks. We will be on your YouTube page. All of our interviews are videoed because we have really good-looking people like Ed Guerrero on there. So now we're gonna take a turn. You're still talking to me because I'm also a real estate investor. Let's talk about real estate investors and some of the tax strategies that they can take advantage of that they may or may not know right now.
Well, the big thing, JJ, is that a lot of real estate investors, first of all, they should see their real estate as a business.
Sure.
That's rule number one. They have to see their real estate investing as a business.
Sure.
A lot of them make a mistake because they don't put the books in order.
Right.
And so they'll get into, for instance, a house flipping or wholesaling or rentals in real estate, and they haven't put in their books to keep tabs of all their expenses, all their income.
In our industry, we call it commingling.
Yes, and that's a bad word.
It's highly unethical, and it's illegal for us real estate professionals, licensed professionals, to commingle funds.
So I can't do everything in cash?
Well, exactly. Yeah, you definitely want to have some audit trails and documentation because really at the end of the year, a lot of folks forget.
Yeah.
And missed a lot of deductions because they didn't keep their books. And
right.
That's what I see a lot of in the real estate game is that a lot of folks have just missed the record keeping to document and have the audit trail.
When we have an investor that goes and buys a property with us, we, for me and my wife, we have a couple of rental properties, and we have individual accounts for each one. We have individual, files for each one. So we clean the carpet on one or we renovate the other. They're separate, and so the money's never touch each other. I know when I met some investors that they have like their personal checking and their other mortgage coming out of the same.
I just do separate pickle jars.
Pickle jars, yeah. Little piggy banks.
And that could work, and the word is could, right?
But you really want them to like as a business, you want them to have P&Ls, profit and loss statements for each individual property that they have.
Well, absolutely, because it really at the end of the year, you want to be organized and you want to be able to prepare your CPA a profit and loss on each property.
Sure.
And you want to be able to identify the major expenses and then as a CPA I can decide and I can look at the nature of that expense and the repair and maintenance and say, well, is this a true repair and maintenance or should we be capitalizing it, meaning that we're not making it 100% repair and maintenance.
Right.
and we can give you better alternatives for taxation based on a profit and loss statement.
Right.
Versus a shoebox coming in and lots of receipts or the pickle jar coming in and we're looking at it going,
it's clean.
Yes, I know. But
it still smells like vinegar. So back to the business owners and the investors, do you think it's important for them to not do their taxes on there or to have a professional look at them?
Yeah, I mean, quite honestly, I see a lot of folks that say, well, I did my taxes last year on my own, and when I tell them bring it in, I look at it, they end up missing things such as deductions that are what I see over and over.
Sure.
So as a tax strategist / preparer, I see thousands and thousands of returns come through my desk. So
right.
I can look at it and go, well, you're missing insurance, you're missing interest, you're missing real estate. And whereas a preparer, they forgot and they just missed it. And they've left the deduction out.
Sure.
So they think they're saving money by doing it on their own, and actually what they're doing is they're leaving money on the table.
That's exactly right. They're leaving money on the table. I had an example the other day that I just amended this individual's real estate, and he's a real estate investor, and he left out depreciation on 2 properties.
It's crazy.
And that totaled $8,000 in deductions.
Wow.
Which, in turn turned out to be approximately about $2,400 in refund for him.
Yeah, but that's $2,400.
Yeah,
and I'm glad you brought that up. So, we send a lot of our clients to you. We meet them, they buy a house, we tell them no more H&R Block, guys. Oh, I shouldn't have said that, but no more cookie cutter box, preparers anymore. You gotta
no more QuickBooks.
No more QuickBooks stuff. You need to go see Ed, and we always say that. And they feel like I'm pushing you just because you're my friend. we're not friends at all.
We're
I don't
not
even- I don't even
friends.
have his cell phone. By
Are
the
we?
way,
Are we
He
friends?
won't.
I didn't know.
He
we were
won't
friends.
give me his
Try
phone.
to get his cell phone number. He won't give it up.
I text his office and nothing comes back. It's crazy. But but we tell him to go see Ed for the reason that you can now be a tax strategist after you buy your first home, or after you buy especially after you buy your investment home. Because at that point, I think you have to involve someone. I think the basic stuff when you're younger is okay, but it's time to see a CPA and get all organized. But I did like that you brought up that you amend taxes, right? So
Absolutely.
you can go back how far?
We can go back 3 years
Sure.
and correct what somebody has not done correctly,
Right.
and fix that or amend it and take advantage of the tax code to get you more money back.
So if there's investors listening out there right now or watching us on YouTube, they can go and get a hold of you and say, hey, look, I did the last 3 years. I may have missed one or two things, and you'll go and review it for them.
Oh, absolutely. We love to review people's returns and real estate investors and take advantage of. Let's see what you missed. And quite frankly, we find a lot of things that they do miss because they're not used to seeing thousands of returns.
Right.
And they might have misplaced the insurance policy that they paid, or that home warranty that they had for that investment property, or for instance, they paid a gardener for do landscape. They miss all these things because they didn't have the proper documentation, and I'm asking the questions, and then we're finding those deductions.
Sure.
So if you're just tuning in, you're listening to Bobby and JJ Radio. We're sitting here with Ed Guerrero, owner of Guerrero CPA, San Antonio's best and largest CPA. We're going over tax strategies. So what are some common mistakes that investors are doing here towards the end of the year on their investments?
Well, the big thing is that a lot of the investors haven't really laid out their accounting to analyze all their deductions.
Mm-hmm.
But there's some things that investors can do, and there's always a balance with investors. We got to be careful with lowering their taxes too much. I know that sounds crazy, but because investors, they need to be in the game to show income.
Sure.
And you still got to have a balance on your return. So what we do is we look at the balance of the return, and we'll put in all the deductions, and then we'll look at, do we need to capitalize anything, so that saying that, do we need to change it from an expense to a capital item so that we don't show it as an expense, so that now you show a higher income. That's called balancing the return. So for investors, we've got to have a balance, because they want to stay in the game. They've got to be able to show a balanced income.
So they can buy the next property.
Exactly. Because
Yeah.
if not, I do have a funny story. There's one quick story that
Please do.
this lady came in. She says, do you know cost segregation? I said, yes, I know cost segregation. She goes, are you sure? I said, yes, ma'am, I do. And she says, well, I still want you to learn this cost segregation, and I have these folks that want you in the webinar. I took the webinar, I did the webinar with them, and okay, we did it. So she says, that's what I want to apply to my taxes. Okay, so we did it. She bought an apartment complex. We put cost segregation, meaning that we're going to reduce a lot of her taxes and we're going to depreciate everything. And we did. She comes back 6 months later. I'm mad at you. I said, why?
I don't make any money.
She says, because I'm not in the game of real estate investment, because I don't make any money.
You don't make
I
any
said,
money.
well, you told me you wanted cost segregation.
Yeah.
And at the time, she was saying this was going to be my only property, but she changed her mind. She wanted to play the game a little longer, so
Yeah.
she was out of the game.
Yeah, that'll take you out real quick if you show a tremendous loss.
Exactly.
Well, bank's gonna give you money if you look like you're just bleeding all over the place, right?
Exactly, and that's what they told her.
Absolutely. So what's something that a real estate investor can take advantage like right away?
Right now, they can take advantage of their repair and maintenances and depreciation on their properties. So
Sure.
if they get properties and they can depreciate them or fix them up at the end of the year and do some leasehold improvements, we can have Section 179 or additional repair and maintenance to reduce their taxes.
Sure.
So a lot of the folks, they're waiting on holding off, well, should I repair the property or not? Go ahead and do it so you can reduce your taxes
Right.
and have a favorable tax treatment.
Absolutely. And so what about do they have a different deadline for their taxes than like an individual would?
And if the real estate folks have like an LLC, limited liability corporation, or an S corp or a C corp, their filing deadlines are March 15th.
Sure.
Okay, whereas all the personal deadlines are April 15th. So again, March 15th for the corporations and April 15th on a personal basis.
Is there any special documents that real estate investors should have prepared to submit?
Absolutely. Most of them need their HUDs, okay? When I ask them, when they tell me, well, we sold 5 properties, we need to have the 5 properties of the HUD.
So the HUD is a settlement statement when you close at the title company that they give you,
the long,
itemizing.
Exactly. That long form that has all the income and expenses, or the expenses on there.
Right. I can promise you that if your clients use the trade group,
Yes.
we have all of their HUDs available for them at the end of the year.
Well,
by
we're
the way.
going to have to send them that way.
Exactly
right?
what
Yeah.
I mean. That would just cure that. But what else besides HUDs?
Well, and the HUDs will tell us all the expenses that what you bought the property for, what you sold it for, and the additional closing costs that are associated with the deductions.
Sure.
And then we give them forms so they can fill out, so they can have the proper checklist
Right.
of all their properties and what the expenses they should have. So insurances, mortgage interest, property taxes, and then we look at what was the cost of the property so we can depreciate it correctly.
Now, real quick, you have a real estate investor every month. You have a place. It's at Perico's the fourth Friday of every month.
Well, that one actually is at the KB Homes.
Oh, the KB Homes off
location.
Fredericksburg and
Yeah,
410.
and 410, yeah.
Okay, great. So we're going to come back with Ed. We're going to start talking just to the people that aren't investors and business owners, just the regular folks. You listen to Bobby and JJ Radio.